Today we're going to talk about stop hunting. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to talk a little bit about stop hunting and some really basic concepts that if you're intraday trading may help you understand a bit more what's happening with the market makers and the intraday movement. Obviously some of the stuff we're going to go over today is going to be broad and overall encompassing, but the basic concepts show up every single day in the markets, and if you can learn some of these basic concepts and step back and start to identify with what's happening day to day with the market makers establishing the ranges and the stop hunting that goes on, it may help you understand a bit more about how some traders or the majority of traders will get trapped and why 95 or more % of retail traders lose money. So there's a couple of basic things that happen every single day. The market opens up, it trades up and down in a certain distance, and it will close. Or it will open up, auction up to a certain point, auction down to a certain point, and close. Those are the majority of the types of days. Obviously, we have other days where they're dojis. We may have an inside bar, and we may have an outside bar. We also may have similar types of patterns with engulfment candles. But what's happening is that in the mornings, if you look at your Forex charts, you can use an hourly chart. I like to use an hourly chart for the big picture, and I like to use 15-minute charts for when I'm getting down to crunch time. Now, we've talked about other videos how in 80% of the time, Monday and Tuesday will often establish a high or a low selling point perhaps for the week, and we'll often see another move continue down sometimes from that Monday, Tuesday type of sell-off. It can be again something like this. Oops. And then the market may continue down, or it could be something similar where we see a Monday, Tuesday, Wednesday, and then the market reverses back over the following few days. Now, what's happening day to day, I'm not going to get into too much depth. I've talked about getting the free course on the M's and W's. If you haven't done so, go to my homepage on the blog. You can get it for free. It's a very detailed course on the general market structure and what's happening day to day, and also the M's and W patterns that are very tradable. But what I want to talk about today is the stop hunting. So if we take a basic candle, if we look at this first part of the day, the opening price, at the end of the US session into the next day, if we call this our daily marker, so Monday, Tuesday, whatever, the market will consolidate and often go back into a trading range. We call this the Asian trading range. Typically, obviously this can move out into different ranges of price, but typically on any given day, especially the first couple of days of the week, it will tend to probably stay somewhere in that 25 to 50 pip ranges. Now, I'm sort of specifically talking a bit more about the British pound pairs and the euro pairs, but generally speaking, this can apply to any pair. But obviously, if you're trading the Aussie or the yen or the New Zealand dollar, you may see movement that occurs earlier into Asia. Now, again, these same structures will show up, but it may require you looking at the broader range that's occurred into the US close. But typically what we'll see in a bar chart like this is the market will auction, do a stop hunt, come back, and then go into a trending phase, and at some point come back, consolidate, and then go back into its consolidation. Stop hunt occurs up here, going often maybe into the US session or into the London close. This typically will occur at the London Open. Now, we've talked about this in other videos between two and 5 a.m. New York, you will often see one of these extremes set up in the market. Now, what's important about this is that if you can start to identify the type of overall structure that you're in the market, so we have the previous week's trading, the market may have auctioned down, we may have a Monday that's auctioned down. Typically what will happen is that when the market is in a down phase, that will have started off with an M pattern. When we have these M patterns in place, stop hunts will usually to some degree have what you may want to call an A type setup before they hit a W pattern on the bottom. And this could occur again over Monday, Tuesday, Wednesday, Wednesday, Thursday, sometimes Wednesday, Thursday, Friday. As we saw last week, the market Thursday into Wednesday, Thursday formed a M pattern with a third thrust that came down, and then Friday was a reversal day. Monday, Tuesday have been stop hunts, but we're seeing that actually consolidate, and possibly tonight with the Fed we may see a reversal day on those as well. But what's important about this is to get the basic ideas of what's happening with these types of days. Again, consolidation, stop hunt, trend, consolidation. Now, what I want to show you about this type of setup, and again, it doesn't matter if it shows up on this, on a down move or an up move, but inside of these consolidations, typically you'll have 3 pushes. So when we're in Asia going into the London Open, I may look for 3 levels of rise up and then 3 levels of rise down. Now typically, if we were to see these 3 levels of rise down, we may also see 3 final pushes that ends up in a smaller W-type pattern intraday that then sees the market take off quickly. And again, we're looking specifically between 3 and 4:30 a.m. for this to happen. Usually when you see London open up, the market will move quite rapidly, and often what will happen is that this third thrust down will often be a bear candle before it opens and moves very quickly to the upside. Now, traders who do not have a limit order here, or if they haven't maybe gone to a smaller time frame, or they're not able to enter into the market here, will find themselves then chasing the trade. And in some cases, this can work out if the market continues to move strongly. Now, what I will often do on an hourly chart is look back to see whether it's in the London session or the US session, if there's been any breakouts where the gap hasn't been filled for this trader, and they've now moved their position. They've shorted the market the previous day. They've moved their stop loss to break even somewhere in here. The market will tend to fill these gaps. Now, we've talked about this in other videos where if you look at the charts by the end of the week, very few gaps are left on the market, on the charts. And that typically is where I often will say they make sure that nobody makes any money. So you may be in a big trade, like on Friday, some of these traders were up 80 pips. They moved their stop to break even, and maybe they were convinced that the market was going to pull back and roll down again, and they were stopped out quickly. Now, though, we've talked about this, I've done this several times, held on to positions and not understood what was really happening, and watched the market come back and stop me out at break even after being up a significant amount of pips. Now, again, as we head into perhaps once that gap's been filled, we may be looking at a final consolidation pattern with, you know, two thrusts. Again, it'll be somewhere just prior to the U.S. Open in a lot of cases. If the market hasn't filled this gap and the U.S. Open is somewhere in this range, we may often see a continuation move. Again, a lot of this will come with screen time and experience, but the most important thing you can pay attention to are the times of day. So again, with the U.S. session somewhere between 8 and 10 a.m. New York, and London, these are New York times, and with London, between 3 and 4 a.m. specifically. 2 to 3 a.m. is sort of the Asia close. Very rarely would I enter in prior to that. Sometimes you'll get this little box or W pattern, and the same applies for a down market, maybe at the Asia close. Now again, this is the general pattern. When we get to this third, you know, if we have 2 days of rise and we get into that third day, so we'll talk about that as well, because tonight being the Fed, we may often see what's called a double stop hunt. So the market has had perhaps 2 days of rise. So we'll call this 2 days of rise. We get into the Fed, and what you may often see is we'll see this trade out. The market will run up to a new high, run down, stop out the breakout traders down low, come back again and consolidate. Now this is what we would tend to call the midweek reversal. Now in some cases, what we will see with this midweek reversal is it can be a continuation move on the Thursday, Friday. But in a lot of cases, and this is where your overall market structure will come in, looking at your previous weeks and your overall chart, is that we may see this market roll over, come back, and roll down on Friday. So back to Monday's low, which is sort of similar to what we saw last week. But tonight being the Fed, this is typical for a Fed type of day. Traders will get in, they'll go long, they'll hold on to their positions. Longs that get in late will get trapped up here. They'll reverse that. They'll run the stops from the London breakout traders, and then they'll pull back and consolidate and possibly stop out any weak shorts up in this range before they go into that sideways range again. So again, these are all typical behavioral patterns of the market makers. Again, we've talked about this in other videos. The banks control 60-70% of the volume. And it's important, again, time of day, most important thing, time of day. Look for these 3 push patterns inside of that Asia box. And then be able to identify at specific times of day. Again, I really hone in on sort of 3:45, 7:45 a.m. New York, and up to 9:45 a.m. New York as key times to see if there's already been a stop hunt or if the stop hunt is underway. Now, again, what you'll often see with stop hunts are candles that have either long tails, so again it could be a either side of the market. So if we just, pardon my drawing, you're looking for market where there's been evidence of tails at these key times, or where you've been able to identify 3 levels of push one way or the other on whatever time frame you're trading. Again, typically intraday, I would say that a 15-minute chart is all you will need to identify that. And then some evidence of a reversal sending the market the other way. Sometimes it will be an M pattern, sometimes it will be a W pattern. And other times it may be a railroad track where we'll see a bull candle and then a bear candle reversing that completely. And again, we want to see that into that third level of push And again, that could be in the opposite direction as well, where we're going long into a downtrend. So again, this will come with some chart time and experience. Really important to hone in on these times specifically. But again, your overall market structure, your Asia consolidation is really important. And again, you want to identify these three levels of push intraday. So we'll often see 1, 2, 3, 1, 2, 3, stop hunt and gone, or vice versa for a down market. Hopefully you got some value from today's video, traders. Stop hunting. This is a very powerful way for you to, number one, stand back and take a look at what's happening overall in the market without getting caught into these little trends that are designed to entice retail money into the opposite direction so that the market makers can generate liquidity and build up order flow and then move the market to the other side to wash out those orders. So if you haven't done so, go to my homepage, get the free M&W course. Also, get my 7-step daily routine for high-performance traders. Build your discipline and your confidence and a winning mindset through understanding what's happening in the market and through that daily practice. These markets, when they move, will do a minimum of 25 to 50 pips on each push. So there's potentially 50 to 100 pips or more a day if you can really master this and get good at it. We're going to expand upon this in future videos, but hopefully today you've got some of the general concepts. Take a look back at the last few weeks of your charts and see if you can identify these patterns that are taking place every single day in the Forex markets. Have a great trading week. Remember what we talked about with the Fed tonight. Could see the double stop out. And if we see that, we could be seeing the midweek reversal follow that, or perhaps a continuation and a measured move of the last 2 days of trading. Have a great trading week, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets. And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.